Welcome to weekly view on markets. This week markets have continued their up move and all the indices and most of the sectors have closed in the green, and a sharp recovery from the lower levels have changed the market structure, the market sentiment, the chart structures in last 10 days. RBI policy was announced last week, and in the policy the rates were kept unchanged, and RBI was confident that inflation will be stabilized and it will come down. So this has given a big boost to the markets, coupled with FII buying has returned to the markets. So these all factors have changed the sentiment in the markets. Let us look at the various indices first. Nifty closed at 17,828 with a gain of 228 points and closed higher with a gain of 1.3%. Bank Nifty gained about 1,091 points, closed at 42,132 with a gain of 2.66%. So we can clearly see the banks were leading the rally during this week. Mid-cap index closed with a gain of 1.75%. It has gone above 530 points, closed at 30,884. Small cap index continued its up move from the last 2 weeks, closed with a gain of 126 points at 9337 and gained 1.48%. India VIX is at 11.90. So market is trading with very low volatility. So that means the market is quite stable and fear in the market is receding. Let us look at various sectoral performances. Most of the sectors have closed in the green. The realty sector gained 6% last week and another 5.25% gain is there during this week also. Auto sector has closed with a gain of 3.60%. Metal sector has gained around 3%. Private banks have gained about 2.21%. Healthcare and pharma closed with a gain of around 2.6%. Manufacturing sector gained around 2%. Financial services have gained around 2.12%. PSU banks have gained around 1.8%. Only two sectors slightly losers during this week. Most of the sectors gained during the week. The overall sentiment in the market was quite positive. Let us look at charts of different indices and try to understand what is in store technically for the next week. This is the daily chart of Nifty. If we can see from around 16,800 levels, the market has picked up and given a sharp rally of around 900 points so far. Now we can see the chart structure which has been making a lower tops, lower bottom has first time made a higher top. So it has crossed the resistance level of 17,800 and closed above 17,800 at 17,828. Now we may see a slight dip in the market. So that dip is a good opportunity for buying the stocks. Why I am saying is the Nifty has made a left shoulder, then head Now it is set to make a second shoulder. After making it, there will be a dip, and that dip will be bought by the informed people, and then it will cross this 17,900 level. When Nifty crosses 17,900 levels after giving a dip, that is a clear indication of a trend reversal. This inverted head and shoulder formation will be complete. When this formation gets completed and Nifty closes about 17,800, the market will change the trend and it will be in a bullish trend. So our early indication is that it has made a higher top. So it is started negating the lower tops, lower bottom formation. So it may take another 1 or 2 weeks to confirm this. Once that happens, the market structure or the chart structure will change. Now 17,700 will be a good support for Nifty, and next resistance will be at around 18,000 to 18,100 level for Nifty. Let us look at Nifty mid cap index. The chart structure of Nifty mid cap index is also quite similar to Nifty. So it is yet to negate the formation of lower tops and lower bottoms. For this, Nifty mid cap index has to close at above 31,250. So we'll have to wait till Nifty mid cap index close above this level. If there is any dip at this point of time, that will be a good opportunity to buy mid cap stocks also. Presently, 30,900 will be a good support for Nifty, and next resistance will be at 31,250. So when this resistance takes off, the chart structure will turn positive. It will give a trend reversal signal. So that is the time we can have a bullish view of Nifty mid cap index. Let us look at Nifty small cap index. Small cap index has given a huge rally from at around 8,700 points, and the rally may continue in small cap stocks. If there is any dip, that dip will be a good buying opportunity. And small cap index has a resistance at around 9,400 to 9,500. This is a strong resistance. Many times you can see that from these levels, uh, Nifty small cap index has reversed. So we will have to wait till the small cap index rises above 9,500 levels, and then our trend will change in the Nifty small cap index. Let us look at Nifty Bank Index. It is Bank Nifty Index. This is a Bank Nifty Index. You can see it is kind of a breakout above multiple tops. Here it made one top, then again came down, then made second top, then again came down. Now third time, this has decisively closed above this top, 41,600 level. Bank Nifty has next resistance at 43,000 levels. So when Bank Nifty is around 43 levels, then we have to be little cautious. So the overall chart structure shows that some more upside will be there in the Bank Nifty also. Now let us look at some of the fundamentals of the market. See, there are several underlying fundamentals factors and economic indicators that support the change in the chart structure and the rally that has happened in the market for last 10 days. So IIP data for March 23 has been published. Core sector has grown by around 4.3%. So in core sectors, many sectors like oil and gas, energy sector, power sector, electricity, manufacturing. So there are 7 to 8 different core sectors. So if there is growth in those sectors, it indicates that there is pickup in the industrial activity in the country. CPI inflation has come at 5.66 for March 23. If we remember, that last week RBI paused, it did not increase the range. So during this week, the inflation figures have come. It is below 6%. So RBI was mostly anticipating this type of change, and they were very confident that inflation will come below 6%. That is the RBI tolerance band. So it has come below 6%, which is quite good. And RBI is very confident that inflation in next few months or few quarters will be controlled below 6%. It has come within the RBI band of 6%. Exports of goods for last financial year, that is 22-23, has grown by 6%, but imports have gone up by 16.5%. What has happened? The most of the import bill is due to the higher oil prices, and earlier the import bill used to go up by increase in gold imports, but this time we have seen the gold imports have not gone up so much. It is the electronic items and components, semiconductors, uh, parts and other things, due to which the imports have gone up. So this supports the Indian manufacturing industry. So exports have gone up. That is a good indication for Indian economy and for the export-oriented companies. Exports of services have grown up by 27%. So IT exports and other services exports have gone up big way. So that has helped to control the overall trade deficit at 122 billions for the financial year. Indian rupee is stable at 81.85, and dollar index has also slightly come down from 103 to 102.13. Uh, Gold prices have crossed 61,000 level mark during this week. After the collapse of banks in US and Credit Suisse in Europe, dollar index has been coming down. The demand for dollar has come down. That is the reason gold prices are above 60,000 for last 2 weeks. Crude price has gone up after OPEC has announced the production cut. It is at 86.63. So if crude price goes higher, that will be a red flag for Indian markets and Indian economy. So we need to watch on the crude price. FIIs, after selling for almost more than 1 year, now they have returned to markets. They have bought 3,355 crores this week. DIIs have sold 411 crores. What is helping the market is uh, the mutual fund investments have touched a record of 20,354 crores during March 23. It is the highest ever inflow of mutual fund SIPs into the equity market. TCS and Infosys have already announced results. More results will come next week. So IT sector results are impacted by the global slowdown. So The results were just meeting the expectation or slightly fell short of expectation. But having said this, if there is any fall in good IT sector stocks, it is a opportunity to buy them at lower levels. Even though there will be a recessionary pressure in US and Euro for next maybe 6 months, 1 year. For a long term, the IT sector is a good sector, and this dip will be a good buying opportunity. We can expect a specific movement because lot of results will be coming and markets will react to the stocks based on their results. Now markets have already gone up. Sensex has gone up from 58,000 to 60,500 levels, and Nifty has gone from 16,800 to 17,900 level. So we have to talk about the market valuation. Whether the market valuations have become expensive, I don't think markets are valued fairly at this point of time. Nifty is trading at 20.99 price to earnings ratio and price to book value of 4.07. So Nifty companies look on the higher band as far as price to book value is concerned because more asset heavy companies have come into the Nifty index. That is why the price to book value looks on the higher side. It should be around 3.5 to 4, but now it is at 4.07. Whereas Nifty P is 20.99 and 1 year forward P, you know, I have estimated it with taking a growth of around 14 to 15% in Nifty companies will ease at 18.25. So this coincides with the long-term Nifty average, P average, prices, P ratio average. So with this, I feel that presently market is fairly well valued, and it is good time to buy at these levels, and good time to invest in mutual funds and start SIPs with a view of next at least 5 years time. Mid cap index is trading at 22.29, and on a price to book value basis, mid cap index looks quite attractive at this level because it is trading at a price to book value of 2.74, and the estimated P forward P of 1 year is 18.25. So this is a fair value. Nifty small cap P is at 16.81. This looks quite a attractive level comparing to the long time average. And price to book value is also it is at 2.86. So fair value. It is below price to book value of 3. This is good valuation. And 1 year forward P is at 14.61. This also looks very good. I have been telling for last more than 2 months that there is a lot of value in the small cap sector if we are able to pick up good companies. So this price earning multiple as well as price to book value of small cap indicates, and we can look at even good mid cap sector also. So this is all about the valuation of the market. So even though we have seen a sharp rally of last 10 days, still market has not become expensive. If you have 3 to 5 years view, this is definitely a good level to buy. Markets have not given any return for last 1.5 year. So this consolidation helps the market to give a rally in next maybe 6 months to 1 year or 2 years, and investors will give get very good returns from that rally. So mutual fund investors should continue their investments. You can look at starting fresh investments at these levels, and informed investors can look at buying good quality stocks. So this is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.